Welcome to the Full FX Unfiltered. I'm joined by Finn Jakobsen, who is Sales Director EMEA for FX at KX Systems. Finn, I wanted to sort of touch base again and follow up on what was a very interesting session we had in Stockholm at our Full FX Scandinavia conference specifically around the use of data, because it is, as I think has been said for several years now, the oil that sort of, powers the financial markets. So how are people consuming data currently? And, how far are we down the move towards real-time, data consumption?
Most people are consuming the data by simply taking in the feeds from their different vendors of liquidity and pricing, be it prime or exchanges, store them either locally or in the cloud, and have access to them. In many cases, T+1. Obviously, if you are to consume data and use them from real time, you need to keep the data close to you. So you have to have them in memory, basically, and subsequently push them further away time-wise on desk, so it's still close to you. And as data gets older, move them away to what we would call historical databases.
So it's quite a flexible arrangement required then to actually store. The data has a value.
Data has a value, and it's our opinion that data has the highest value in the very second that they are born. Because if you have knowledge, if you can make the analysis on the data and make a decision in an algorithmic way, that is very valuable. As time goes, the value decreases until at a certain point it starts to increase, because that specific piece of data sits next to another and another and another, and you can start to gain knowledge from what happened the last time we were in this situation.
But then, to your point, certain types of data at a certain age can be stored in different places further away from the process.
Exactly. And the trick, of course, is to make sure that you structure your database in a way so that the data sitting very close to you in memory are structured exactly the same way as it is in the historical database. So you can make a query that is covering from now and until whatever time in the past.
So I guess then that would also mean that your storage path, for want of a better word, for the data would actually depend upon the type of data and maybe the type of, the asset class from which the data is being generated.
What we do is time series database. So one important parameter is the timestamp.
Right.
So you can easily have an FX trade stamped at one point of time and 1 millisecond later at equity. And then you figure out how to extract what you need in the way you formulate your query into the database. Okay,
so because I'm thinking, for instance, obviously, if I'm taking data on FX swaps, in terms of the time value, to me, then that is less important than that microsecond timestamp on a spot trade.
Absolutely. There's a clear link between volatility and the real-time aspect.
Yeah.
Real-time for real estate trading is different than spot trading FX, to make it perfectly clear.
There are plenty of people that agree with you there when it comes to those. So if I'm at an institution looking to integrate this, real-time data and manage my data more effectively, what are the sort of challenges I need to look for? What sort of structure do I need to put in place?
You need to put in place a structure that allows you to access your data quickly and easily without having to pick up from different tables and different venues and different formats and spend 1 day, 2 days, 2 weeks to create the report that you want. Some of the people we are talking to are having that structure in their background, and they have to wait for 1 week, 2 weeks before they get the report on whatever question they raised.
Yeah,
it might be relevant and sufficient in some cases, but if you are to manage a book of risk and you have to make sure that you're pricing your clients correctly. That's not good enough. Then you need to have real-time access to data and be able to react in near real time.
Is this something that you think the industry, financial markets industry generally, is becoming more aware of than maybe it was 3 years ago?
Absolutely. Absolutely. The number of banks and with quant teams that are doing this and interest in this discipline, when the further away you move from the tier one banks, is increasing. So you see more interest from regional banks, you see more interest from the larger brokers to do these things in order to make sure that they are comfortable with the risk and they are comfortable with the way that they are being priced and how they price their clients.
Because it does work both ways, doesn't it? You can use this data for upstream and downstream.
Yeah, sure. There are always two parts that can be measured. Your vendors, what's the cost of reject? What is the latency from a specific, what time of day is this provider better than that one? Who is spending the most time on top of book? All these things, all the TCA parameters that you normally use, you should continue to use. And then you also need to make sure that the flow that you're sending to your LPs from your clients are of the right quality.
Yeah.
And make sure that your clients are not taking advantage of your systems.
Yeah. So I guess one of the bigger themes over the past 4 to 5 years has been big data. And I remember people saying it will, it will grow and it will become a bigger data issue. It strikes me this is actually something that will eternally grow. So how do we cope with, I guess, big data becoming bigger?
First and foremost, the cost of storing data on-prem in your own machines, in your own hard disks and so on, is becoming more and more expensive. At this point of time, for geopolitical reasons, it's very difficult to get access to further equipment, shortage of chips and all the things that we read about and hear about. We are relying a lot on using the cloud providers for our clients in order to put data that has low value in object storage, keep it in the cloud, but keep the structure the same as you have on your local desks and in your memory, so that it becomes accessible.
So effectively, you're prioritizing data.
Yeah, we have a specific business case with one of the tier one banks who decided to move their data away from on-prem storage. They put it in the cloud, and there was no visible change in performance, and they cut about 80% of their cost base on those data by putting them as object storage.
So do you think then that, how would you say awareness of the benefits of the cloud are in foreign exchange markets? I mean, you mentioned they're a tier one bank. Is the use of the cloud also, filtering down the different tiers of the market?
It is. Anything that is not sensitive information, the GDPR rules, of course, has to be obeyed to. And it's not everybody who's comfortable of doing that in the cloud. Prefer to keep that on-prem, and that's perfectly fine. But the pure tick data can easily sit in the cloud, and that becomes more and more relevant. And we are pushing our clients in that direction to the degree that they want to move. I don't think we have, for the last year or so, we have not been speaking to any client or potential client that has not had an interest in cloud storage, using the cloud. It is, I don't know if it's the new black, but it's increasingly relevant to all participants. And the more relevant and the more used, the more accessible it becomes also to smaller entities.
Yeah. On our next generation tech panel, inevitably we got to the subject of crypto. How is the data business playing out in crypto markets or crypto assets generally? What are there specific challenges there?
Oh yeah, but not challenges that we have not seen before, because it is, without trying to insult anyone, it's slightly unstructured.
Yeah.
Different tools and mechanisms are being used, probably also with from the starting point, different views on how to structure things. And if you add to that, this is what we saw in the early days in the FX market before the fixed API got developed to the degree that it is now, and it's very uniform. There are only small nuances between provider A and provider B in their API specs. So that's not that difficult to deal with. It's more difficult in the crypto still, but I think that it will be so that the introduction or the entrance of more institutional players in the crypto market will put a requirement on the crypto exchange and liquidity providers to be more uniform in how they distribute data. At this point of time, if there are 250, 300 exchanges, they use at least 3 different means of transporting data, and they are all trading Bitcoin and Ethereum and what have you. It's a huge, huge, huge amount of data. If you, as a market participant, an asset manager, or a user of this market, if you want to store all data, it's a costly experience to do.
So I guess that's just another sort of brick we have to put in our wall of challenge for institutions adopting crypto.
Yeah, that's one thing. And then you also, when you are ingesting data from an exchange or from a provider, you have to make up your own mind. How granular do I want my data? Do I want to understand if somebody in the 5th or the 10th layer is changing his amount from 11 to 12? Is that a relevant information for me? If the top of book and the other 4 or 9 layers are not changing anything, is that irrelevant? So some sort of filtering, some sort of sanitization of the data, making sure that the quality is sufficient for your purpose.
So I guess then that's again, to your point, there's no real difference there between what we've faced before in other markets. There's a lot of data out there, but some data is more equal than others, to paraphrase Animal Farm.
You said it yourself on a couple of occasions during the conference. It's another asset to trade.
Yeah,
it comes with the same attributes, and since it's relatively new, some of the old teething problems that we had in FX, we're seeing in crypto as well. And that's fine. We'll solve.
Which I guess at least means we can bring our experience in FX to bear in helping the crypto industry actually overcome their challenge.
Sure.
Yeah. Finn, thank you very much for your time. It was great to share a stage with you in Stockholm, and it's great to have you back on the video again. Hopefully we'll speak to you again very soon.
Let me say, Colin, it was a great experience to be in Stockholm. It was a good venue, nice people, and relevant subjects all the way through. A real pleasure.
That's great. Thanks for everyone for watching the full FX Unfiltered. We'll be back with another episode fairly soon.